And recording in progress. We talk about winning the game of capitalism, get out of the rat race by building assets and pass them over tax-free to your next generation. Number six, how to get expat traffic in investment opportunities. Creation of an environment where people can open up their potential and discovery of Japan's new role in the United States and Mexico now is Nihongo-de-USA's purpose. As of 2023, we provide two main services, the creation and management of rental housing for expatriates families from Japan and asset building assistance through U.S. real estate. We'll continue to expand our service throughout the United States and Mexico and to develop a Japantown. Nihongo-de-USA's one-stop real estate service. There are so many Japanese expats come to different parts of the world to be assigned to work for doing the assignment of their work. Unfortunately, even in the areas where houses are normally owned by the residents, Japanese expats are sent to the world to rent a home to complete their work assignment. So when they come to us for help of a search of a home, they are typically looking for a rental home. In Ohio and other areas in Midwest and Southeast area, and also in some parts of Mexico, home ownership is normal. So when those expats come to lease a home, we match their needs with houses on the market for sale and match them up with the investors who are interested in purchasing for the expats rental demand. So we identify an investment opportunity and help them buy the property. We place a tenant and property monies, help with financial options to buy more properties, seek their exit fund when it's time for them to either pass the assets on to their offsprings or to exit, to sell, to change to different products. So Japanese automotive plants are located mostly in Midwest and South area, and also Central Mexico, where I went to visit with Joaquin last week. So we strategically locate ourselves in Ohio, Alabama, Indiana, Michigan, Kentucky, and Mexico. So we can provide our clients, no matter where their locations are in North America. Now, let's talk about winning the game of capitalism, get out of the rat race by building assets and pass them tax-free over to your next generation. Number six, we're going to discuss investment property. Number four. I am the speaker of today's seminar, Akiko Miyamoto. I am a real estate investor myself and the founder of Nihongo-de-USA. I built $2.1 million in equity in homes and then $9,000 monthly cash flow. I am going to talk about some of the experiences and why we do what we do. And these are the properties that I myself purchased with my husband. And then later on, I invested with the company money. And then now, Nihongo-de-USA staff member together started to purchase the investment because we believe what we do, build assets, and eventually we'll be able to work for as our life work to help Japanese continue to work in North America, renting a house, and also we want to help other people who build their own assets through this. So what actually happened to the investments in 11 years. And today is property number 4. And these are the properties I have purchased myself with my husband, or with a company, or with the staff members. You can see that we started working in our Dublin, Ohio area. That's where the number 2 density of Japanese population in Midwest. And then we got inquiry and asked for help in Fort Wayne, Indiana, and Madison, Alabama, Elizabethtown in Kentucky. Try to be helpful when a first client tenant wants to create a rental home. We have been the guinea pig, unless somebody else who are our clients who want to try out buying. There are so many areas that do not have the rental homes, so therefore we're receiving many inquiries from many different cities in Ohio and also different parts of America. So today I am going to talk about property number 4 that we purchased in Dublin area, but it was a Columbus City School. Purchase price was $179,900. Property tax was $4,478. This was purchased back in 2015, December 28th. These figures are based on the end of last year, 2022. We invested 25% of the purchase price and closing cost for $47,765. We financed the rest, 75% of the property price, which was $134,925. At that time, the interest rate was 4.75%, and monthly principal, interest, and tax and insurance came to $1,110 a month. We later refinanced during the COVID because the interest rate dropped. So we will talk about refinancing later, but we have refinanced this home once. This is a 4-bedroom, 2.5-bath, 2-car garage home built in 2006. It's 1,641 square feet. The reason we purchased this home was we have placed our tenants into rental homes that was coming up in this subdivision. So we knew there was a need for this area to be a rental home. This house came as a short sale home. And I knew that the market value of this house was, at that time, was $216,500, but this came up for sale. And we were able to go into contract for $179,900. So we already had an equity of $36,600 without putting any down payment, which is 70% of the house value. Short sale, you might not have heard of this term because the housing market has been crazy in America, at least. Short sale is a situation the homeowner financed the house and the amount, a balance of the mortgage is more than how much you can sell the house for. In some of bad situations, this happens, but housing price has to go down in order for short sale to happen. So if we're expecting a bad economy, are we going to the short sale situation and we'll be able to buy houses in a short sale less than market value price? That would be a dream, right? Unfortunately, since the last recession, 2008, 9, 10, the property value has gone up so much that it's unlikely that short sale situation of that time is coming back. But you never know, because housing price has gone up so much last year. Say we go into a recession right now and property value drops by 10%. Some of the people who financed more than 90% of the house value could go into short sale situation. In any case, we captured this property because we understand this area was popular for expats. So no tenant at that time of purchase was there, but we still thought this would be a good opportunity to buy because typically expats were spending $1,800 a month for this size of the house. And estimated PITI monthly payment came to $1,110. So that would create $690 in cash flow. So it'll be a good purchase. You can see we put down more than 20%. We put down 25% to create this cash flow. So we continue to teach you the lesson. Cash flow is not something you're given. Cash flow is something you create by the size of down payment. So December 28th, we had a closing and we renovated ourselves the house. Because it was a short sale situation, house was not totally renovated. Instead, the homeowner had to leave. So therefore, we had to give a fresh coat of paint, some of the cleaning. We decided to do it ourselves this time. I think it was end of the year and we had a bit of time. So therefore, it should be done in 2 weeks if we hire somebody, but it took us a month and a half. And we listed this house for $1,800 for a tenant on February 15th. We paid mortgage payment in February and March. So when the closing happens in December, the first monthly payment of the mortgage comes second month. So we paid $1,110 in February and $1,110 in March without having a tenant, because we finally were able to place a tenant in March. So how did that happen? I'm sorry, we placed a tenant in April, but this was the number 4 property, and we already had 3 other houses rented by the tenant. So therefore, the first house, we had a tenant paying $1,850, and our monthly mortgage payment was $1,288. And property number 2 had an income of $1,800, and mortgage payment was $1,143. The third house, the rent was $1,800, and our mortgage payment was $2,083. So therefore, we had a cash flow from those 3 properties for $1,736 each month. So therefore, in February and March, although we didn't have an income from this house, we were able to pay monthly mortgage payment of $1,110 from the cash flow. And we still had a cash flow of $626. And I continuously say, just buy up to 3 or 4 houses, and then eventually time comes for you, the money or house start making money itself. This is one of the reasons that we experienced that by buying the 3 first homes with the tenants in the 4th house, you can take a little bit of risk. I would say this is a risk because we bought a house without a tenant in place yet. But we were able to wait for a good tenant to come because we were creating enough cash flow from the past 3 property purchases. So April 13th, we captured Honda supplier tenant. Unlike our expected rent of $1,800, this tenant paid even more, $2,000. And this first tenant lived here for 18 months. Cash flow was $890. October 31st, 2017, tenant family was sent back to Japan, so they moved out. And we spent $1,543 for repair and cleaning. They didn't live for a long time, and we did renovation, a fresh coat of paint before this tenant moved in. That was still clean, so therefore we didn't have to spend too much money to replace tenant. November 15th, listed for $2,000, and within 15 days, only 15-day vacancy, we were able to capture Honda tenant. They moved in for $2,000 for the next 48 months. That's 4 years. That's a long time. That's why it's a power for you be able to capture a long-term tenant, because while you're being paid month to month, you have opportunity to cash out any of the property's equity and to try to buy the next property. So that's the key. You create enough cash flow, and then you continuously grow your equity of the property. When equity grows, then you cash that out and use that as a down payment to buy another house. So even if you can only afford to buy one house, you just need to wait longer time until you're able to buy the second house. If you have enough cash to buy 1, 2, 3 property number 3, then you can move on to number 4 a lot quicker. It's just a matter of how patient you need to be, but it can be done over the course of the years. So don't worry. January 1st, 2019, lease renewal and rent increased from 2,000 to 2,060, so cash flow grew from 890 to 950. And here, first refinance to grow cash flow. So cash flow can grow by rent increase and also refinancing. So some of the people who are thinking it's not time for you to buy because interest rate is high, just buy it, because if you wait until the interest rate drops, probably 2-3 years or next year, but the price of the house goes up anyway, once you close the house price is capsule. It's not going to increase anymore. You can always drop your monthly payment by refinancing when rate drops. It's not the other way around. If you wait for 2-3 years and you look back on, oh shoot, I was able to buy the house at cheaper price. It's too late. You can't go back to the past, right? So here we refinanced from 4.75% to 3.75% during the COVID. And PITI dropped from 1,110 to 1,007. Cash flow grew from 950 to 1,053. November 23rd, 2021, tenant moved out and renovation for 5,600. So this time, it's been a while since we purchased the house back in 2015, 6 years. So we decided to spend some money. We placed fresh coat of paint. We worked on kitchen backsplash and granite countertop of master bath. We didn't do all the way to I would have done. You can see that the cabinets in the bathroom and kitchen are kind of brownish. I would have painted in white or a little bit grayish white, but I didn't do that. The reason was I knew the market rent was 2,200. For 2,200, this much renovation was enough looking around other houses. if I were to try to capture higher rent, I would have had to do a little bit more, such as color coordination. So moving out the brown, but making into white or gray in today's trend. So after current tenant moves out, I'm planning to do that, but I don't know what color yet because white and grayish white has been the trend for a while. The trend could shift. It might come back to brown. If that's the case, that's great. We don't have to repaint the cabinets. So we'll see how it goes. But every time you place a tenant, we give you an advice of what you need to do in order for you to minimize vacancy. We look at the rental housing market all the time. We walk into so many rental houses in the neighborhood, so we know what it's like outside. So we can give you a particular advice on how much renovation is needed to capture what level of rent price. So after that, we did renovation for $5,600 listed on December 10th, 2021 for $2,200. Here we have a little bit of vacancy. Do you see that? We kind of wanted to stick with expats long-term tenant. But around this time, during the COVID, there was very, very limited or close to none traffic of expats families. So therefore, instead of keeping this house vacant, sitting with creating no income, we decided to take local tenants. So we advertised for open market. March 10, we captured a local tenant for $2,200. The cash flow grew again from $1,053 to $1,253. This tenant lease is through March 31st of 2024. They might continue to lease. We are planning to increase the lease to $2,300 if the same tenant wants to continue to lease, or like I said, we might adjust the cabinet colors and maybe changing the carpet flooring to linoleum, laminate flooring, and color coordinate to today's trend to try to get 2,500. So the choice is on you, in you, which way you want to go. And we always provide advice what creates what rent as well. So here is the capital gain and income gain as of end of last year. And I also put a year ago in comparison how much this property capital gain, income gain, or any kind of gain has changed. End of last year, the purchase price, of course, the same, $179,900. Invested amount, same, $47,765. When you want to sell this house, now you can sell this house for $350,000. The balance of the mortgage is $119,000, and deduct that, the difference is $231,000. That's the equity of the house. And you deduct that, how much we invested, $47,765, is the difference in capital gain, which is $183,235. So the money, $47,765, created capital gain, $183,235. A lot of people look at how much you purchased the home and compare to capital gain. And of course, it has grown a little bit over 100% because we bought the house when it was valued at $179,900. Now capital gains $183,235. It's okay. No, it's more than okay because the actual money you spend is only $47,765. So it's a return of 383%. Now look at the income gain. Same invested money is 47,765. The total rent income over how many years? 7 years is 155,244. Total mortgage payment was made for in the amount of 89,269, and we spent $15,472 in total expenses. So therefore, the cash flow is $50,499. We spent $47,765, and cash flow is $50,499. So total return is 105%. Not very much. But look at this. The total gain is $233,734. The return is 4 times, almost 5 times in comparison to how much you invested. So capital gain has gone up by 49,000 compared to last year, which is as close as original invested value. So the money we spent 2015 in 47,765, the same amount was gained in asset in 1 year. Income gain has reduced due to the renovation done in 2021 by $12,000. But with capital gain and income gain together is $37,000 more in a year. That's quite a bit of gain or growth in 1 year. And the reason capital gain is realized is we continuously put income gain back to the property, so it's at the market condition. We have some investors who purchase the house with us and then lease the house for a while, and then some of the people want to sell the house without doing any renovation but minimal repairs. And when house is rented and then minimal repair is done, it's not possible to sell the house at the market price, so you will not gain in the value in the capital, where capital gain is a lot more than income gain. So that's why we give you advice at the time of tenant replacement to do aesthetic improvement. And this year, we're starting a new service of providing every 3 years the cleaning of the gutters and cleaning of the vent of the dryer. At that time, we will send a contractor to check other areas. How is your fence? How is your deck? How is outside paint? And we'll give you what needs to be done. Because I am a landlord, I understand I do not want to spend a lot of money all at once at the change of the tenant. Here, I believe that anything aesthetic should be touched to attract the next tenant. But if there's any maintenance is happening, that should be noticed. So it doesn't catch you in a surprise saying like, ooh, all of a sudden furnace broke and we need to spend $6,000, $8,000 in replacement of furnace and outside the AC unit. Instead, we started to provide every 3 years, we send a contractor to check up on your house. And if we see anything needs maintenance, we'll give you an estimate. Whether you pick up on the estimate at that time to do it or not is really up to you. But by having somebody in professional eyes to tell you what's going on, what condition your house, gives you peace of mind and also a planning power. Because, oh, I know this is needs to be done right now. I really don't want to spend it, but I can plan it for the driveway surface to be resurfaced. That's going to cost $250. Why don't I do that next month or something like that? So nothing in the maintenance catches you in a surprise. Instead, that's in under your belt, you understand what's going on, and then you can focus on aesthetic uh, renovation, or I would say improvement to the house at the time of change of tenants. All right. Do you have any questions? If you do, I am happy to answer any of the questions you may have. Okay, if you don't have a question, then let me make Miki a co-host, and then we continue on with the housing market.
Quick
Yeah.
question. So, as investors, sorry, this is Sudhir. With the current interest rates being so high, how would it be, feasible to invest? Because the house prices that are listed are quite high, and the returns are going to be so low with the mortgage payments. How do you see this as a, for someone who's coming to invest? When we do the numbers, we may not be having much cash flow.
Right. It's a great question. Like I said, we put down 25% instead of 20% here to create more cash flow. So one way to enter into the market is put down more down payment now to capture it, to show at least I recommend 10% of the rent. So in Dublin, a typical home that's gonna lease is the rent is $3,000 or so for $450,000 house. Sometimes we have to put down 35-40% for today's rate to show that much of cash flow. We recently purchased a home in Dublin with the member of Nihongo-de-USA staff members. We put down 35% and to show a cash flow. And we'll talk about that case later in a few months down the road. So we need to put down more money to show cash flow. What happens is that eventually when the interest rate goes down and value of the house continue to go up, because for example in this area Intel's opening up 2 fabs 2024. By 2039 8 fabs of Intel open up. Honda, LG opening up EV battery plant next year 2024. We're expected to double the property value in next 7 to 10 years again. We cannot keep this high interest rate. So eventually the interest rate goes down. Just like I explained with this property today, when the interest rate drops, then you'll be able to refinance up to 75% of the value. As I showed it to you, the property price goes up. So how much of 75% goes up in tomorrow's market than today's market? And at that time, if that keeping 25% cash out and 75% of the mortgage payment gives you enough cash flow, you can take the cash out and use that cash to buy the next property. That's the only way in order for you to enter into the market. You need a little bit bigger chunk of money than 2015 because this house right now costs $350,000. And more than 20%, if you need to put down 350 times 30% is a little bit more than we spent in 2015, right? But you have to get into first investment property. Otherwise, you cannot realize a capital gain. You cannot get into this game, so to speak. So if you do not have enough cash to create the cash flow, the first thing you need to do is find where you have money, savings, stock, anywhere. Look around to see if you can spend the money and then capture the first house, because the capital gain is here for you. Most of the time, you're making more than any of the investment you've made. Did I answer your question?
Yeah, yeah, that's very helpful. Yeah, thank you.
You're very welcome. That was a very good question. Time is now because the price of the house just keep going up. Any other questions? All right. You can always ask us any questions, but we'll move on to the housing market. Here in Dublin, in June, closed sales back in last year, 2022, was 120, and this year, 2023, 119. That's a great news. We're kind of catching up. In contract, in June last year, 116, this year, 133. Ooh, there are more houses going into contract. That's a great direction. Average sale price, 532,309 to 534,085. That's not a good direction, but it's kind of settling, only 0.3%. Median sale price, 455,000 to 493,000. Hopefully this will settle down to the price adjustment. But like I said, this area, tons of businesses are coming because on the coast, this typical $493,000 house in Dublin, in LA would be $2 million. So if you're moving to continue to work for Intel from LA, ooh, bargain, right? How many houses can you buy the same price, 2 million divided by four houses, right? So you can buy your own house and make 3 rental homes. That is why, unfortunately, prices in this area keeps going up, because for the income that you can get in Columbus, the housing price is still very reasonable. Average price per square foot, $240.93. Percentage of original list price receives 103. So it's above 100%. So you can see it's still a multiple offer situation. Percent of last list price received 103.7. Same thing. Days on market until sale, 11 days to 12 days. But look, year to date, used up to June last year was 12 days. Now it's taking 21 days. That means that inventory hopefully is building up. So go to the bottom line, month supply of inventory. Last year was just 1 month. Now it's 1.1. But inventory of homes for sale compared to last year, we have only 102 homes. So this trend has to change in order for this market to shift, because even if interest rate is high, there are still multiple offer situations. As a result, house price continues to rise. So therefore, if you're a new investor, now is the time to purchase. Another idea, if Ohio is too high to start your investment, why don't we take you to other states like Indiana, Huntsville? There are areas you can build a new home for $300,000, and we're placing expats into those new homes. So Novi, I am going to talk about in place of Kenta. So Novi, similar situation. Novi has the most dense Japanese population in Midwest. Doubling next. New listing 137 last year, this year 89. Pending sale 109, this year 72. Closed sale last year 107, this year 64. Days on market is adjusting 12 days last year and 15 days. So that's slightly a good news. Median sales price and average sales price gone up the same way. Percent of list price received, yeah, about higher than 100%, meaning Michigan, Novi, still multiple offer situations. Inventory of form, it's just half. So it's really not good trend. But again, if you want to go into the rental market, just you need to buy this time, but go in, because once you're a property owner, this trend is not really a bad thing. The way I built asset is because I continuously put the money into property. If I kept $47,000 I invested in the past 2015, how much do I have from interest rate? Nothing. Instead, that $47,000 buy less house, right? Because housing price has gone up. The value of the money stay the same if you put it in a savings account. So I am very lucky to be able to put the money into the property, which grows faster than inflation. Dao, do you want to take over Indiana housing market?
Sure. Thank you, Akiko. Hi, everyone. So I am a real estate broker, managing broker in Indiana. So I am going to help you find a property in we have 3 areas that we are focusing on. So the first one is going to be in Hamilton County, with the town is called Carmel. So this town, a lot of Japanese people are living in this area because it's one of the best area for the children. We have a very good school here, and we have a lot of Asian markets here. So as you see, hold on one second. Yep. Okay, so it's happened everywhere. So in Indiana, it's the same. Our median sale price is about 300,000 in this area, but actually it's maybe a little more because of the needs of the housing in this area is increasing a lot. So I would guess that it's about 350 now, but there are so many people are looking. So I just placed a tenant to an apartment, because we don't have an investor for this area. So as you can see, I mean, the sale is a little bit decreased, but it's still going strong here in Indiana. So the next slide. So I'm gonna talk to another area. This area is we placing about 5 housing for this area for Japanese expat. The main business here for Japanese expats is Subaru. We have a very big factory here in West Lafayette, Indiana. So the median sale price is a little low, but actually it's because the town it's kind of like in the middle of nowhere, so it has a lot of sales that they're cheaper. They calculate it with the cheaper housing, but I would guess that the housing that we can get right now, it's about almost 300,000. And a lot of Japanese expats, they like a newer house. So I would say that it's almost 300,000 as well. You know, if you want to buy a good rental and it's gonna last a lot longer.
Also, if you build a new house, you do not have to put yourself in multiple offer situation. You're building a new house, and then while you're building the house, you market your house. Try to capture your next expat family, right, Dao?
Yes, actually, we have the expats coming into West Lafayette all the time. We had so many expats that we couldn't find investor to, you know, to be enough for the expats. So we placed them into a regular rental homes, you know, or the apartments. So there are a lot of opportunity in this area for sure.
So in comparison to Ohio, it's a lot cheaper by the price of the house, and also the property tax is lower, and it's easier to realize a cash flow. So if you are entering into the market of building your asset by investment property, Indiana, West Lafayette might be your first option to go to and start the taste of investment properties, and then grow your asset, and then continue to buy in Ohio if you continue to grow your asset. That's one way.
And then the next area that we have, do you have another area?
This is the third slide, or maybe this one.
Oh, no, actually, I was wrong. The previous slide, it was in Columbus, Indiana, but this one is for the West Lafayette.
Oh, sorry.
So yeah, I'm so sorry. Yeah. Yeah. So this one, the Elkhart County, is for the Columbus, Indiana. This is another area. As you can see that the price is cheaper, you know. So it's the same. It's like we have a big company, a big Japanese company there. It's Honda. It's a Honda manufacturing over there, and it's in the middle of nowhere. And this place, in Columbus, Indiana, we just have an expat contacted us that he wants a rental home over there. So if you guys are interested, we are talking with them on what they are looking for Columbus, Indiana, and then we'll send out our marketing emails, you know, and let you know that, you know, we are looking for an investor for this area. Yeah. Thank you.
Great. Thank you very much, Dao.
Thank you.
Next,
I
David,
do have a question.
go ahead.
Thank you. Regarding the market in India, Dell was telling us a little before, what regarding the capital invested, I mean the price of the property compared, for example, with other states. Since you are showing us that we are able perhaps to buy a house for a little less than in other states, perhaps 1,300 I saw. What's the rate, the rate of return on that capital?
So right now we are trying to aim, if it's financed, 5 to 6%. And when you do that 5 to 6%, I think, Miki, if it's a cash purchase, it goes to 8 to 9.
Yes, especially for this Columbus area, we aim a little bit higher than that rate.
Well, I don't know if we are going to be able to do that immediately now, but if we compare, for example, what's the monthly rent a tenant will pay for a house of 135, and how much is expected to be when leasing a house of 400,000 or 500,000? I mean, for a house of 500,000 or something like that, you are talking about of having a monthly rent of around $2,000, isn't it? In Ohio.
In Ohio, we're leasing houses anywhere between 2,800 to 3,000 for the price of the house for $400,000 to $500,000.
Okay, excellent.
So you
And
need,
what's the expected monthly rent for a house of 132 in Indiana? I'm taking some notes, I'm sorry.
Okay, for Indiana, for Columbus, Indiana, just like Dow showed us, this is right. The expat who is now, he's looking for a house for rent 2,400, and the sales price target will be maybe 300,000.
300.
Mm-hmm.
Okay, thank you so much.
You're welcome.
so what we do is very unique because it's not always market price. When there is an expat coming to town and has to find a rental home for the budget of his housing allowance from the company, 2,400, then depending on how desperate the market condition is, if there is no other competing rental house, we can kind of guide him to how much of the house he can lease to. We can go the other way around. When tenant wants to spend 2,400 and then he is asking particular level of home, if the return is not enough, we'll just tell him there's no way we can capture investor for that price. If you want to keep this level, you need to talk to your company or you need to pay out of your pocket to pay 2,600 for this house. Or if you want to keep 2,400, we'll show you other level of homes that can be turning into 2,400. And then capturing or pursuing one particular tenant is kind of in a good way. That's how I have done with my husband, because expat who just came in, typically their assignment time is 3 to 5 years. If you have a tenant who pays on time, you can even negotiate how much of the house you can buy for them. That's gold, because you don't have to worry about next 3 to 5 years if you ever not get paid with a regular tenant, right? And then the price of the value of the house last year to this year increased like 15-20%. Then if there's any time the interest rate drops, just refinance. And that creates cash for your second, third home very quickly. So that's why we doing this without knowing. We have given many good investment opportunity to the market by us providing housing for the expats. Thank you for a great question, Joaquin. David, would you like to give us an update of Kentucky?
I have a question.
Go ahead.
So with investor investing in out-of-state property, would there be any management help from you guys, or we would have to find a different management company?
Yes. We property manage the same way as we do in Ohio.
Oh, thank you.
You're welcome. Any other questions? David, please take it over.
Hey everybody, this is David McCoy. I'm based in Louisville, Kentucky. I hope you all can see me. We have right now one house in Kentucky in Elizabethtown, and that expat works with Akiko Brake Company. And so the two main cities right now in Kentucky with a lot of Japanese expats are Elizabethtown and Lexington, but they're not the only ones that we have. We have two new giant EV battery plants being built. One is with Ford and Noble Blue. That's going to be built in Glendale. And then there's another one, and I'm drawing blanks on the other company, but it's going to be in Bowling Green. So what I presented is the two main cities that I thought were of interest were Elizabethtown and Lexington. So in Lexington right now, the median house price is $317,127. And the median size of that house is 1,825 square feet. So that's about what they are doing in Lexington. In Lexington, by the way, we have Toyota, or actually it's in Georgetown, but Georgetown is essentially a suburb of Lexington. And the average market rents that in that market right now are about $1,900 to $2,300 per month. In Elizabethtown, even though Elizabethtown is a much smaller city than Lexington, the average home price is $325,000, or not average, I'm sorry, median, and the rental rates are $1,600 to $1,800 a month. And I'd say one of the reasons the prices are higher in Elizabethtown is that town is very close to Glendale, where they are building this new plant. And so there is a lot of demand for housing in E-Town right now. So the prices of homes are somewhat more. So right now in our markets, the residential markets have an inventory of about 1.2 months. It's very, very tight. The last time I checked, for our region, so my region, Louisville and the metro area, we actually encompass several counties, and so for the entire region of our association, there's less than 1,600 total listings, and that region includes something like 8,000 agents. So when you think about it, that means that 80% of the agents have no listings right now. It's just a very tight market. It is a little bit less tight than it was this same time last year. Last year, it was about a little less than 1 month's inventory, so it has gone up a little bit. But as they have said in other markets, we still are in a situation, and especially in homes that are, say, $250,000 and less, those sell immediately. I mean, they get multiple offers and they are off the market almost immediately. And I don't know that I can tell you the exact days on the market, but I believe last time I checked, it was about 12 or 14 days on the market for a typical home. So it's a very hot market. Some of the questions that they were asking a little bit earlier, the investor has quite a bit of say over this in terms of, when an expat goes, I mean, we go and we look at the homes with them, and they do select the homes that they like, but we find out what their monthly allowance is. And so the investors have a chance to look at that and decide, hey, what's the maximum amount that I can pay for this home in order for that to make sense? And if it doesn't make sense, as Kiko said a minute ago, we either talk to the expat and say, hey, we can't make it work at that, can you kick in more? Or maybe we need to look at something, at a little lower price range. So you do have quite a bit of say over that return. I tend to kind of ramble on, so excuse me for that. I hope I covered all the bases. If you all have any questions, please let me know.
Joaquin, we have a program. The non-resident of US can use a home mortgage So if any of your investors in Mexico wants to finance to buy a property US, we have a non-resident home mortgage product.
Excellent. Thank you.
I have a question. So you mentioned non-resident home loan.
Yes.
Would that be applicable for people who are on visa, like H-1B?
As long as they have a work visa, yes.
Okay, thank you.
They also have a expat mortgage too. So you can look at two options, one non-resident home mortgage and also expat home mortgage.
Okay. How different interest rate are there compared to somebody who's a US citizen?
It's a little bit higher. And
Okay.
the detail changes month to month. So
Okay.
if you're interested, I'll connect you to the lender
Uh-huh.
and you can specifically talk to him about the rate.
Okay. Sounds good. Thank you.
You're welcome. Any other questions? If not, then we'll move on. And Joaquin, if it's okay, I would like to share our experiences visiting Mexico. So last week, I met up with Joaquin at Querétaro Airport and visited some of the cities in central Mexico where most of or all of American and also Japanese automotive companies are located in Mexico. I met Joaquin through CIPS, and last year we couldn't meet up, but he gave us good clues about central Mexico, so I decided to go there to see what's like. While we were there for 1 week, we received inquiry from a Japanese expat family who lives in Lyon, wants to move to a different unit. The husband has been assigned there for 2 years. As far as he goes, it's a brand new building and gated community for safety and security purpose. He was very happy. However, wife comes in, then dynamics changes, right? Wife wants to live closer to the supermarket and other commercial area. So she said if there is any other unit who is under their budget and also in a similar condition of the current living condition, then they are happy to move to the new unit. So that's our first inquiry. At the same time, we visited Mexico City and spoke with 2 other Japanese realtors who's been helping the market for the Japanese expats housing. We learned, interestingly, that a big company, Ridak, they're a public company in Japan, has just left the market during the COVID, along with another giant company from Japan, Starts. And we saw the same thing that in some of the market like Michigan, Novi, and Huntsville, Alabama, we were competing with Ridak, but we saw them kind of disappearing from the Michigan market, and Huntsville kind of we were sharing the market now. COVID was a hard time, and a large company has larger budget. So yes, for a large company, a public company to stay in business in such a local market of business, sometimes market and size matters. But that's where we can be strong. And that's why we think we have a chance to be able to provide the services in every area and every region of the same Japanese automotive company locate themselves. We're getting ready to, sell directly to the Japanese HR because Japanese companies are very used to a company providing every area of Japan, every area of the world. Japan is one license country. So not like United States, real estate license is just one in entire Japan. So therefore, to them, it's very strange to deal with United States real estate market because every state is different license and you have to deal with different phases. But as a HR of a large company, can't you imagine if you have to deal with so many different phases in every state? That doubles, triples, quadruples their work task. And that's why if we can come into front of their eye, say, hey, we can take care of you, one-stop service is here, it's such an advantage. Now we know that two large companies disappearing from the market, maybe it's time for us to be able to service. Joaquin, I spoke a lot. If you can talk about Mexico market, please.
Well, we had a great time when you were here in Mexico, and yes, for sure, something that surprised Akiko was the dynamic Japanese society we have here in Mexico. I mean, stores, food stores, restaurants, perhaps more than she told me that perhaps more food offer in terms of restaurants than in Ohio. We have that thing here in Mexico City, and also we can tell something like that in Querétaro and León. We can tell Silao is a small town in Guanajuato where many Japanese automotive plants are located. So now, for example, we are starting working with an expat here in Mexico. He's asking for us to help them getting something in León, Guanajuato, which is like 1 hour northwest of Silao, where the plants are located, due to security issues and more comfortable much more in Silao. I had the opportunity to get into my inventory platform, my CRM, and we found 2 properties that perhaps will fit the demand of our expats, you know. So it's going to be closer to shopping centers. It's also a gated community. Now the expat is paying something around 43,000 Mexican pesos as a monthly rent. We can have for that family something like they do have now for 38,000. So they're going to be saving some money, and they're going to be having a better location regarding shopping centers and so on. Now, what we found in León now is that the best neighborhoods we can offer to expats is located north part of the city. No matter Silao is southern León, and they will have a daily commute of 45 to 1 hour to get it to the job. Expats are willing to spend that time driving, having a better life conditions in León. And I don't remember exactly, Kiko, but they are thinking of moving the very first day of November, isn't it?
Yes.
Yes. Okay. So perhaps it's going to be a good time for us to start sharing with them the listing for them to pick and choose what would be best for them. You know. So I do have already translated those into English, the listings to be shared with you, and perhaps we can just start from there. You know. And I guess this is most the part of the job we have been handling here, and but the touristic point of view is yours, Akiko. So how was your stay in Tequisquiapan and your horse riding and so on? So let me know.
Yes, it was amazing how extensively you can find a Japanese food in central Mexico. It's more than Kentucky, it's more than Indiana, it's more than Ohio, more than even Michigan. So you can see like how much the Japanese community was established there. And in front of us, what it's sharing is this is one of the community development. That Joaquin has one unit and his family has another unit. So basically, this is very close to the university. Within the gated community, as you can see, there is a golf course, ponds, playgrounds, supermarkets, restaurants, and retail. So and then soon there will be a man-made lake, and then restaurants on the lake, and some marine sports capabilities. So I was just amazed how much that it is becoming popular in America too. Instead of just housing being housing, commercial area, commercial, separated by zoning. Now America is developing community with stores and all the other amenities coming along with the residences. So Mexico has done it by far in a larger scale. And I heard that how that, land became available through the history is amazing. And soon I hope America would start having something like this too. So if Mexico is capable of developing community like this, and some of the Japanese automotives sending hundreds of Japanese expats, we should be able to talk to them and explain we can prepare housing in community like this. So I think there's a lot of future for us in Mexico, and we're excited that we can open up the Mexico investment opportunity too, because just like I did, you can go on a business trip to Mexico, and then on the way back, like I experienced like horseback riding, and there's a springs. You can take a part of some of the fun part of the Mexico along with your business trip, because if you own a property, you can claim it as a business trip, right? So if you have any more questions about Mexico, please contact us or join our next meeting. But again, it might be a great idea to show some of the properties at next month's meeting, what kind of houses you're showing to this particular expat's family, and how much it would be to buy, and then how much they're leasing for, right?
Yes, for sure. Well, actually, I do have here the listing. So if you would like to share, if you would like to see that listing for that specific property, it's an apartment. So I can share the screen for you to show, for you to see some photos or pictures of that apartment. If you would like to, I can do that now.
Okay. So maybe very quickly, we just
no, not a problem. If we are on time, we can do it next time. I mean, doesn't matter. That's fine.
Okay. Well, let's do it next time then.
Perfect.
And so
okay.
we can share it without being in a hurry.
Excellent.
All right. Okay. Mickey, do you want to take over some of the investment opportunities?
Sure.
Which slides should I share with everyone? Indiana or Alabama?
Okay. Could you show on page 22?
Sure.
Okay. Yes, I'd like to introduce the opportunity. Now in Madison in Huntsville area, Huntsville, Alabama area. we are looking for 3 bedrooms, single family home, and we are targeting the price for around $330,000. And rent will be, if we could rent for expat, we can rent for 2,300. And if we look for local tenant, it's start by $2,000. But we are still looking for investors to purchase in this area because the price is really settled down from last year. So it's time to buy. So please let me know, and I will, of course, send you information, investment opportunities once we have expats. But you don't have to wait for expats. You can always buy first, and I can place tenant later.
This is the area that NASA, all the other companies are also here, not only Mazda, Toyota, joint venture factory. There are a lot more suppliers for Mazda, Toyota are coming into this town. It's very attractive for engineers to live in because the Madison School, Madison is basically a suburb of Huntsville. So it's like a doubling of Columbus. And because of one of the high public education, people are coming to this area to live. And
yes.
Unlike Ohio, the tax rate is low. So you can show cash flow a lot easier in this area as well.
Yes, I have this listing for this month to local people, and I have a lot of inquiries from the local tenant, from like American families, and they can pay for 2,300 for rent. So it's I feel like we can find both tenant, American or expats, for 2,300.
All right.
And we don't have any active opportunities, just like you see on this slide. So I want to skip that, and I'd like to send you by email if I have new one.
These houses, we were looking for an investor, but the houses move quickly off the market because of the multiple offer situation. So these houses actually are not available, but expats are there to move in. So please, if you're interested, we can give you next opportunity and you look at the property virtually with your potential tenant. If the tenant decides to move in, you need to make an offer on that spot so you can capture the particular house the particular tenant is going to move in after closing. Alabama is the same way, right?
Yes.
So this is the Indiana apartment. Like Dao explained, in Lafayette, there is a Subaru plant, and we have 60 expats living there. 30 of them are families, so they want to move into houses like this into West Lafayette because of the school district. Rest of the 30 people are single. I mean, they might be married and have kids, but they left their family in Japan and came to work alone. So they typically move into apartment building. There are 30 of them. Also, Subaru rents 10 to 15 units for their travelers. So the people who are not moving in to work, but they're on business trip anywhere from 3 months to 1 year, move into apartment and work for certain programs. So they need a certain number of housing units, and therefore they're asking us to purchase this particular apartment building that David located and have us property monies to make their moving process a lot easier and quicker in Japanese. And as this is a fully occupied apartment and cap rate is 7%, but Subaru is paying higher than current lease in this building. So therefore, by one replacing the tenant with the Subaru employee, you're gonna increase income. And then we can help you to exit. We can sell this apartment building to another after you increase the return and income. Or as we've been doing, we can parcel each unit out and sell that unit, independent unit, into as a condominium. We set up a HOA, we continue to property manage, and then sell each unit to investors who's been buying single family homes, or there are local companies which are walking distance. So once it becomes a condominium, the workers who want to walk to the companies will be interested in buying this condo. It's very conveniently located. So if you're interested in buying the property as an entire complex of apartment building, please advise us, and we're happy to speak about this property opportunity in detail. Thank you. So we went over time quite a bit. I'm not gonna cover the rest of the programs today. We'll just meet next time. I'll be in Japan with the Ohio State and Marysville leadership for the trade mission to Japan. So therefore, I'll be in Japan from September 2nd until 13th. So the next meeting will be September 19th, 7 to 8, and same Zoom link. So I look forward to seeing you again on September 19th, third Tuesday of the month. Thank you.
Thank you. Bye-bye.
Thank
Thank
you.
you.
Bye.
Bye.
Bye.